Good morning, guys. Welcome to Intriguing Stuffs. I'm Ashwin. Today we are going to see about the different types of charts available in in.tradingview.com and what are uses of different charts. How can we use it to analyze different stocks? Okay, it will be interesting. Keep watching. Let's get started. Okay, before knowing about charts, what should you know as an investor? The important thing you should know as an investor is, who are you? That is, know yourself. That's the important question you should ask to yourself. Okay, who are you? There are three categories. Okay, normally four categories of traders or of investors. In that four categories, one is trader and three is investor. You know what is trader, right? The intraday traders. The persons who buy the shares and sell the shares on the same day just to look on the profits is known as traders. Their trading time should be and should close within a day. That's the trading limit. You should know when to start and when to stop. You should not exceed that. Okay. For other three types of investors are short-term investor, medium-term investor, and long-term investor. Okay. What is short-term investor? Short-term investor is the investor who invests money for 2 days up to 3 months, maximum of 3 months. You should not keep that stock in its portfolio for more than 3 months. You know why? Because you analyze the stock for a short term as a perspective of a short term investor. If you try and get greedy, like okay, I will get more profits, I will wait for some time, then there are high chances that you will lose that profit also. So you should know yourself. Be a short term investor. You should close around 3 months. Okay. Then medium term investor. Medium term investor is a little longer than short term investor. Like he trades from 3 months up to 1 year, the maximum of 1 year. You should not keep that stock in this portfolio for more than 1 year. Okay. And long term investor is the one who closes the trade after 1 year. Minimum you will have it in its stock in its portfolio for 1 year. Okay, it's short term. And medium term investor up to 1 year, and long term investor more than 1 year. Okay, you know these points, right? I have written a short form, you noted it briefly in your notes. And there is a compulsory rule. You should not exit your time frame. That's a compulsory thing. Okay, don't forget that. And a good technical analyst always considers facts. Leave the emotions like panic, greed aside. You should not take the greed into, okay, I will get more profits, so I will keep on waiting till the price reaches the top. That's not it. An investor cannot achieve 100% profits. If you get 90%, if the target price or highest price it goes for 100 rupees, but you get a chance for quitting it at 90 or 95, that's a good trade. You got 95 rupees profit, right? You quit it because after 100 rupees it will take only just a matter of minutes to come down to 80 rupees because it has reached its top, it has reached its high. So be careful in that. Okay. Now let's see other things. Okay, now let's get into stocks. I mean charts. Sorry, there are almost many types of charts, but I am going to discuss the main 4 types of charts in this video. Okay, the first type of charts is known as line charts. Line charts are charts which are drawn with the closing price of the day. If you are considering the prices according to days, for short-term investor, look on the charts which have days candles or days markings. I will show it in the in.tradingview.com. Line chart is nothing but just a line representing the stock price. The price is in upwards and time is in downwards. Okay, line chart is like this, just a single line representing the stock. Okay, this is a line chart. And what is and the second type of stock is bar chart. Bar chart is nothing but line chart சொல்லிருப்பேன், அத கட் பண்ணிரு, அப்புறம் இத கன்டினியூ பண்ணு. And advantage of line charts. What are advantages? It's easy to read and understand. You can see that top price is here, lower price is here. Again, next high is formed here, next low is formed here. It is an uptrend, it is a sideways trend. You can analyze it very easily using the line chart, right? And what's another important significance? It's easy to plot. Now, downtrend is not important because we are readily getting available charts in online itself. But in traditional and olden days, they are trading using papers and physical copies. So they have to check the daily prices from newspaper and to plot a chart, and there are so many works involved in analyzing stock. Nowadays, it becomes so easy. Workload is almost 90% down. Okay, one disadvantage is you can only see one parameter because it is marked using the closing price. Only closing prices are involved. Okay, what are the 4 types of parameters? I had taught in last video, right? O, H, L, C. That means open, high, low, close. In this line chart, only one parameter is used. Close parameters is only used. Okay. Now let's see new. Okay, let's see another chart. Now let's see about a bar chart. Bar chart is nothing but same like this, but it consists. It is drawn using a bar. Like a single line represents a single bar, and there will be a horizontal line at bottom and top. This is low, this is high, and this is open, this is close. Okay, in a bullish candle, bullish bar. Sorry. In this, we can see all the 4 parameters. Then, what's the advantage over this? We can see all 4 parameters in this. Okay, what can be the disadvantage? It doesn't look good, right? Yeah, I am drawing like this. I am drawing beautifully. That's why you can see it as beautiful as this. But in reality, that will not be nice. But instead of this, they formed a new type of new type of chart known as candlestick chart. Had got pretty famous. They only did a small modification to the bar chart, bar candle. Like this is bar candle, right? Open, low, high, and close. Now what they did, they extended this line and they extended this line, then joined, and painted it inside. This is a candle. Simple. Now you can see everything: low, high, close, and open. All 4 parameters can be seen, and it will also be beautiful. Bullish means bearish means in red color, and bullish means in green color. That's the significance. Same. For this, open and high, low, close. But for this, we will have a different case because it's a bearish one, right? That means this is open, this is close, and this is high, and this is low. You understand, right? Bearish means it will be a low. The closing price will be lower than the opening price. Only then it will form a bearish chart. We already seen bar charts, right? There is a small modification in bar chart that is known as volume bar chart. Simply, they uses both volume and bar chart. That's all. In a chart, there will be bars like this, and there will be a significant volume for all the bars also. That's a volume bar chart. We will not be using this that much. Any chart that much. We'll be using only candlestick charts with volumes. That will be more significant, right? Higher the volume, better. With candle and volume. Okay. Sorry guys, I left some points while teaching you. That's why I am editing this video and attaching in this. Okay. Let's talk in detail about a single candlestick. How can you and what can you understand from a candlestick? Okay. Let me draw a candlestick first. Okay. Let's do it. Okay. This is a candlestick. What can you understand from this? You can write. I will teach you. That's why I'm here. We will paint it in this. Okay, I will take another color while explaining. Black. That's my favorite color. Okay. In a candle, there's two main parts of a candle. One is this is body of a candle, and this is wick of a candle. Okay, what is body and what is wick? Like I said, there's 4 parameters in a candle: open, high, low, close. And let's understand in a story pattern. In a day, when the stock market opens at 9:15, there will be opening price. That is this open price. Let that be rupees 100. Okay, and at the time of closing, I mean at 3:30, there will be a closing price. Let that be 80 rupees. The difference in the opening price and closing price is known as the body of a candle. Okay, then what is that wick? Or it can also be a shadow, and many other names are there in Japanese. Let's keep it as wick because it's nice. Okay, what is wick? On a day, it will not be within a specific range like 100 to 80. When the stock market opens, it opens at 100 rupees. Many bears, that is sellers, are trying to sell many stocks and push the price down to 280 and lower. That means lower. It will be 60. The price has reached 60 in that day. The lowest price it has reached is 60. That's why it's known as lowest price. And when the buyers see this opportunity, like 100 rupees stock, after analyzing technically and fundamentally, 100 rupees stock is available for 60, they obviously starts buying it, and the price increases rapidly. Then it goes above the opening price, goes above above the close price, above the opening price, and reaches a new high. Let's say it's 120. Everything is 20 in English. 120. That's the highest of that day, of the single day. If you are taking a day candle, it's the highest of the day. If you are taking a week candle, it's the highest of that week. Okay, 120 is the highest. So that's the wick. And what can you? What's the difference between a body and a wick? A body is the main price on which open and close prices are, which is used and determined for our analysis. But wick is used whether buyers are stronger or sellers are stronger. For analyzing candlestick patterns, there are many candles. Like this one is known as doji. I will draw it. And this one is known as a shooting star. This one is known as a hammer. Thor hammer. Okay, it's a hammer. And this one is a bearish engulfing candle and many other things. It will be on upcoming lectures. Stay tuned. Okay, this is about a candle. When a series of candle is formed like this, it's formed a trend. Now it's an uptrend because it's moving in upside, right? It's an uptrend. Like that we can determine. And for drawing the support and resistance, we should use only the wick. We can cut only the wick of a candle. I'll teach you in detail. For now, understand. We should not cut the body because body is the main part. Wick is just the increase and decrease of a day. Okay, guys. What is the advantage of candlestick charts? As I told you, we can see all the 4 parameters and it's beautiful. We can analyze different stocks using that. It is convenient for our daily needs. That's the advantage of that. Okay, we saw all the 4 types of charts in this video, and in next video I will teach you how to view that in intro-to-tradingview.com and how to analyze those charts. Thank you and see you tomorrow. Knowledge is power when it is used right. Everyone has knowledge and everyone reads a lot of things, but whoever remembers it and whoever uses it on the right time, only they will succeed in life. And I look forward to it. We will succeed together. Thank you guys. See you tomorrow. Signing off.